about what may or may not be the economic impacts of these changes on employers, employees, and the economy as a whole. Laurie is going to then talk real briefly about the duties test, which are unchanged, at least for now, and she's then going to talk about some practical matters you need to consider as you evaluate whether you need to make changes, and she's going to give you some hints about how to go forward in doing that, how you're going to communicate these changes to employees, and what you need to do about record keeping. And finally, Jim is going to walk you through a hypothetical that should bring all of this together, and then hopefully we'll still have some time for questions. So, let's get started. The Department of Labor announced these final regulations on May 17th. They're effective December 1st. We're not sure why they couldn't wait until January 1st, because that's when people change a lot of their timekeeping systems and payroll systems, but my personal suspicion is that this has something to do with the election cycle and the timing of making sure that this doesn't get overturned through congressional action. The weekly salary requirement went from $23,660 a year to $47,000. In other words, it almost doubled for full-time employees for them to be classified as exempt under the FLSA. There's an automatic escalator of salary threshold based on the 40th percentile of weekly earnings of full-time workers in the southern part of the country, because that's where they have the lowest numbers, from the Bureau of Labor Statistics every 3 years, beginning on January 1st of 2020. Now, this isn't necessarily great news, but it's certainly better than the annual adjustment that was originally proposed. Also, the salary threshold for highly compensated employees rose from $100,000 to $134,004 per year. The good news is that the duties test remains unchanged so far. Our question is whether the DOL's next step will be to go to a more than 50% test instead of the current primary test. In other words, that they would adopt something akin to the California rule. So, more good news. For the first time, employers can count non-discretionary bonuses and commissions to satisfy the minimum salary level, but only up to 10% of that minimum salary level, or $4,747. These have to be non-discretionary. They must be paid quarterly or more frequently. Annual bonuses don't count, and discretionary bonuses don't count. In other words, if you get to the end of the year and, oh, gee, we've had a great year, we're going to make a distribution to our employees, that's a wonderful thing to do, but it's not going to count for these purposes. There's still specific exemptions for certain designated job categories. These remain the same. Doctors, lawyers, most teachers, and bona fide outside sales employees, and that's always a tricky one, remain exempt from overtime, and the new minimum salary thresholds don't apply to them. The computer employee exemption remains unchanged. Unlike the executives and administrative and professionals, they're not absolutely required to be paid on a salary basis. They need to be paid hourly, and that hourly rate equals $1,105.20 per week, which is over the new threshold anyway. So now let's talk a little bit about how much this is going to cost globally. As an example, Secretary of Labor Thomas Perez claims that this is going to add as much as $1.3 billion nationwide to workers' pockets. Well, at least one study challenges this claim. Laurie sent me this, I don't know, it was like 75 or 80 pages, and it was pretty interesting considering that it was written by economists. I assume she assumed I had a lot of time on my hands because I'm of counsel, and it actually was pretty interesting. Anyways, this study makes a number of other assertions. First of all, employers are going to be motivated to actually cut base salaries in response to the new regulation, which would pretty much thwart the DOL's goal as stated by Secretary Perez. There isn't a lot of evidence that overtime pay is going to automatically mean an increase in employment, and that the Department of Labor hasn't fully analyzed the impact of the new rule on the labor market. No real big surprise there. Here's a brief example. A supervisor currently makes $35,000 a year on a salary basis and works 45 hours a week. Gets that same amount every week. But as of December 1st, 2016, what if she's just automatically converted to hourly? Is there going to be an adjustment of average pay downward to account for overtime? Is this individual going to get a smaller check some weeks and is going to have to change her personal budget planning for that? And what about taking off an hour early for the kids' soccer game? We'll have more on this later. The Department of Labor estimates a direct annualized cost to employees at about $250 million. That's according to the Department of Labor website. So immediately we've got about $1 billion disagreement between the Secretary of Labor and the Department of Labor. So where is this other billion coming from? And I think you all know the answers to that. A lot of folks have asked us, do you think this is really going to happen? The only way that this doesn't go into effect is if Congress acts pursuant to the Congressional Review Act. Because remember, this isn't legislation. This is a rule. That Congressional Review Act allows lawmakers to challenge an agency regulation that Congress doesn't like by passing a joint resolution of disapproval. That stops the rule from taking effect for 60 days. The President could, and we think would, veto the resolution via a disapproval memo, and Congress then has to override that by a 2/3 majority of both houses. And we just ask you, do you really think that that's going to happen, especially this year when there's an election year? Because essentially Congress would be interpreted as Congress saying, we don't think that that some of the members of the American working public should get a raise. That's the way it would be spun. So that's what I had for my section of this. I'm now going to turn it over to Laurie. Thank you.
And what has not changed with regard to overtime. First, we're going to talk about the white-collar exemptions. Those are the most well-known ones. Sometimes they're referred to as EAP, Executive, Administrative, or Professional exemptions. Those all have a new salary test, as many of you know. It raises the minimum salary of now $455 a week to $913 a week. This $913 a week new salary test must be paid on a salaried basis. That means that normally there is no docking of pay for other than these exceptions that I've listed here. And this is very important to understand the difference between paying a salary and paying a salaried basis, even though that sounds like I'm using the same words. You may inadvertently undo an exemption and lose it if you are docking beyond certain specific exceptions to the no docking rule. So the first, and also, as Bruce mentioned, there are duties tests for each of these exemptions that still must be met. It is not enough to simply pay a salary of $913 a week. An employee, you still have to meet the duties test of the particular exemption. An employee is exempt from overtime under the executive exemption. Again, these duties tests have not changed. If their primary duty is managing either the enterprise or a department of the enterprise, and they supervise 2 or more full-time employees. What does supervise mean? It means, generally speaking, that they must have hiring and firing authority, and or that their recommendations as to hiring and firing are given great weight. An employee is exempt under the administrative exemption when his primary duty is office or non-manual work related to management policies or general business operations, and they have discretion or independent judgment regarding matters of significance. They can't simply be carrying out the directives of the higher-ups, for example. An employee is exempt under the professional exemption when his or her primary duty is intellectual in character and requires advanced knowledge in a field of science or learning, and that advanced knowledge is acquired by a prolonged course of study. as Bruce mentioned, the highly compensated employee exemption has changed in the sense that it has moved from $100,000 to $134,004. This is a highly compensated exemption is applicable to those folks who might, for example, manage a department but don't manage or don't supervise 2 or more full-time employees and thus don't qualify under executive. But again, there's a somewhat less strenuous duties test, but it still exists. That means that they must perform at least one of the duties of what we've already covered, the executive, administrative, or professional employee exemption for that to apply. The computer employees exemption, I'm not going to spend a lot of time on that other than to say that the most important thing to remember is these are not your help desk people. These are folks that are your network administrators, your computer systems analysts, your software engineers, things like that, where you can have an exemption for that if you pay them at least $27.63 an hour. And finally, the outside sales exemption. This applies where the salesperson is required to be regularly and customarily engaged away from the employer's place of business. But at the potential, and then therefore they're regularly and customarily at the potential customer's place of business or elsewhere. And importantly, and something a lot of folks don't understand, is if the employee, the salesperson, works from their own home or their own home office, they are considered working from the employer's place of business. In other words, that makes them an inside salesperson and thus not entitled to the exemption. Okay, so getting to the changes to the salary test and what that means for employers. Raising the salary threshold will likely increase the number of employees classified as non-exempt unless all of your exempted people already make over the new threshold. The reclassification will increase payroll costs and record-keeping burdens that we'll get into in more detail in a little bit. The newly non-exempt employees will need to track time. This is a huge culture shift. It changes both how the employee and the employer view the employee's job. Handbooks and policies will need to be revised and analyzed, and we'll go through that further as we go along. Many employers have already been preparing for these changes by auditing their workforce, looking at how many of those employees they have who are exempt right now but paid less than $47,476, or highly compensated employees who make under $134,000. Employers may also be well advised to conduct a mini audit within their workforce to determine whether a reorganization of job duties is in order. Jim Kalny will talk about these issues in a few minutes, but generally speaking, we're talking about determining what these employees who may be reclassified under the new rules, what duties they're performing, what non-exempt duties are being performed by these folks, and are they being currently reclassified irrespective of the changes. So as part of the auditing the workforce first step, really the first step is to gather all of your salary and incentive pay information for every employee you have who is currently earning less than $913 a week. You'll have to determine where does it make sense to simply increase a salary so that these particular employees can remain exempt. This might make sense to you if the people are making very close to the new threshold, or when you're going to be talking about a reorganization where you're going to move some of the duties of the newly reclassified employee who may work under this person up to the exempt person, and thereby giving the newly reclassified who's going to get a salary increase more money to account for those extra duties. And then who will be reclassified as non-exempt? In order to answer those questions, you have to do some fact-finding. You have to know, and this is really critical, how much do your employees actually work? You need to talk to your managers. You need to talk to the employees. And maybe you need to even start tracking sooner rather than later so that you can have an accurate picture of that. You have to know whether the overtime that they're currently working is occasional or sporadic, or whether it's regular and expected. I would caution that if there is a collective bargaining agreement in place, some of the issues that we're going to be talking about today and some of the strategies may or may not be available based on collective bargaining agreement restrictions in terms of moving duties and things like that. So once you've determined who you will reclassify, you have to determine how they will be paid. Will they be paid hourly going forward? Will you keep them salaried but non-exempt? This means that they aren't docked for working less than 40 hours, but they still get overtime. When you make a person salaried but non-exempt, you still have to determine what their regular rate of pay is for calculating overtime for those hours that they work over 40. And finally, will you limit overtime possibilities for those people who are reclassified as non-exempt? This, of course, means that you still have to track time and you still have to manage that piece of it. So how will reclassified employees be paid? How will you determine what that hourly rate is? Perhaps the easiest, but sometimes perhaps most expensive way to determine the hourly rate is simply to take their current salary and divide it by 40 hours to determine that hourly rate. This is best for those who work overtime only sporadically, or for those you believe you can manage to a 40-hour work week for the most part. As many employers are trying to do, you might, however, try to formulate a new cost-neutral hourly rate. And the way you do that is by, this operates to compensate for that expected regular overtime that you're expecting these people to work, by dividing the weekly salary that you've been paying them all along by 40, and then add their expected overtime hours multiplied by 1.5. The reason for that is, of course, the overtime hours are paid or supposed to be paid at a rate of 1.5. So the example I give is if an employee who you know regularly works 50 hours per week, you can divide their current salary by 55 hours, since, of course, the overtime is paid at an overtime rate of 1.5 times the regular rate to determine the rate. A little note here, as you can imagine, in weeks that these employees work less than 40 hours a week, they might get smaller checks. And this may require some finesse to assure that employees you're trying to keep, to assure the employees that you're trying to keep them at, keep them whole, and because you may get some pushback in this regard. And I'm sure Jim will talk about that a little bit. Another method to pay reclassified non-exempt employees that is lesser known is the fluctuating workweek method. This is permitted in all but 6 states, but none of the states who disallow this are Wisconsin. So for the sake of this discussion, this is permissible, and it's a method that permits employers to pay non-exempt employees a fixed salary where the employee's work hours fluctuate week to week, both over 40 and under 40. This may be an attractive method to those employers who want to avoid situations where employees get those short checks in slower weeks, or in weeks where they work under 40 hours. But they also want to save money. Here, as we'll explain, it can save you up to 2/3 of the overtime pay on the other end, the longer week end. Requirements first are that the employer and employee must enter into a written agreement in advance, clarifying that the employee's salary is meant to cover all straight time hours up to a certain number in a given work week. Of course, you have to set that salary high enough so that the employee never drops below minimum wage, no matter how many hours they work. How it works, in the example in the slide that we've given you, is if you have an employee where you set a $42,000 annualized salary, paid at $807 a week, they are paid that whether they work 35, 40, or 47 hours. Again, this is a salaried arrangement, so no docking pay for shorter weeks. For all hours over 40 in a work week, the employee is paid half-time for those overtime hours, not time and a half, but half-time, because, of course, the straight time has already been compensated in salary. This is complicated because you must first have a written agreement with the employee, and because the employer must divide the employee's weekly salary by the number of hours worked on a week-by-week basis. Now, I understand that the default in most people's payroll software is a straight hourly rate times 1.5 to figure out overtime, but it's my understanding that many of those payroll softwares can be reprogrammed to handle this kind of situation. But I guess our takeaway on this is that if you are considering something like that, please contact one of us to help you. So another consideration is, will you need to change benefits to offset payroll increases? Will you need to make changes to your health or other insurance coverage or your retirement contribution plans or other fringe benefits? Will you change how you do your vacation, things like that? You need to take note whether your benefits, as described in your handbooks right now, are different for exempt and non-exempt employees. For example, do exempt employees accrue vacation at a different rate, or do you let them participate in retirement plans and things like that at an earlier date? You need to take note of that, and you need to communicate the changes to anybody who's reclassified. We'd make one caution there is if you were going to make any modifications to an ERISA qualified plan, retirement plan or things like that, to account for any of these changes, you might need to look into whether or not there's going to require board of director action or something else. Next step is to audit your policies and procedures. Do your job descriptions reflect exactly what the employees do or cover most of their duties, especially as they are changed with respect to reorganization of duties or things of that nature? Are employee classifications defined correctly in handbooks and other places? The next one is really critical. Do your timekeeping and pay policies, will they work for those who are newly reclassified as non-exempt? Do you have a timekeeping policy or a practice whereby you're going to capture all the time that these previously salaried employees might have worked? And do you have a review process in place to keep pace with the increases? As Bruce mentioned, the first increase after this one, after the December 1st, 2016, will be January 1st of 2020. And it's our understanding that the DOL will announce what the new salary increase level will be in 2020, 150 days in advance of that. But you need to make sure that your process is going to be ready to capture those changes as well. This is one of the hugest culture changes that employers are facing in terms of remote work and flexibility. We're talking about people who have never tracked their time, and that culture change is really is going to affect both the employees and their supervisors. All of their work going forward has to be both tracked and compensated. So you need to look at whether your non-exempt employees, your newly non-exempt employees, have remote email and voicemail access. Do they have laptops or other remote access like Citrix or something like that to the system? Do they travel for work? Remember, all of that time so far has been encompassed within their salary, but now must be tracked and it must be compensated. So how will you deal with that change? Will you restrict remote access for affected employees? And if not, will you communicate to them how their time will be tracked minute by minute going forward? The next step would be to plan your communication strategy. Who will communicate the change? Will it be a CEO or a president of the company with follow-ups from an HR manager, or will it just track down to the managers themselves? Will there be a rollout of a broad company message? You'll have to determine who will be the messenger. What is the message? This is going to require some thinking and some planning, because some employees will be happy with the change and some will not. Some of the employees will view the change as a demotion because of the change in flexibility and things that they've become used to, and others will not. You need to advise what is your message, how are you going to describe why the changes have come into effect. This might be your perfect opportunity to blame the government. The changes are required by the law, but you need to communicate that the employee's value to the employer has not changed, even if how they are paid and how their time is tracked has changed. How will the changes be communicated? Will they be communicated in writing? Will it be a one-on-one meeting? Will it be a group meeting? Things of that nature. And then when, it's very important that you communicate this. I know we have until December 1st. Sometimes that feels like a far away, but you need to communicate it. We would suggest that you do that at least 1 or 2 pay periods before the change. All of these people have been reading this in the papers and on the news so that they know it's coming. So they're going to be asking questions, and you need to have a plan as to when you're going to roll out the changes. Train everybody affected, and that means both the employees and their supervisors. I can't talk enough about the fact that these employees have never had to work under these these time tracking and changes to their flexibility before. So they need to understand what is work. They need to understand that if they check their email or voicemail in the evening, if they're working at home, they need to track that time. Do both the supervisors and the employees understand that? Travel time and training time has always been encompassed within their salary. Do they understand that if they're traveling out of town for a training or a conference, that is compensable time, and do they know that they have to track it? And then I'm going to pass this off to Jim at this point, who's going to talk about reorganization strategies and a couple of scenarios.
Well, I think Laurie's made it pretty clear that there's a lot of thought and a lot of analysis that should be going into this. I guess the director of the DOL thinks that we as employers aren't real good at thinking. We're just going to increase the salaries up to the new salaries test and pay some additional overtime as well as paying some additional wage right off the top. Obviously, we don't have to do that. And as responsible HR professionals and executives, we should take some time and think this through. There probably are some ways that we can turn this a little bit to our advantage. We can use the fact that the government has imposed a new program and use it as an opportunity to find some positive. To minimize the cost is one thing that we're going to want to do, and maybe find some changes in our organization, use this as an excuse to look at our organizations and make some needed changes. This is a good time to straighten up some of those problems that we used to have. So the first thing you want to do is I would suggest, is a real nice thorough workflow assessment. Are your duties effectively placed? Does your work flow well? Are there non-exempt functions that can be consolidated, exempt functions that can be consolidated amongst workers? Are the duties equally distributed? So oftentimes you see little pockets that have developed over time where work has been able to just sit and not been distributed fairly based on people who've just been there a long time, or that's how we've ever done it. You have an excuse now to say, hey, we're looking at all this again. We've got the attention of the government, and we have to look at all this again. And that's going to help you look at things like, where's the fat? There's almost always some duplication of effort out there, and there are almost always some people that don't do as much work as others. This is an opportunity, in many respects, to address some of those situations by shifting who does more work and saying that this is all in the interest of avoiding additional overtime under new rules. Analyzing your overtime, I think, is important, and we should be doing that anyway. Amount of overtime, are we paying too much? Is it time to hire another person? All those types of analysis we're forced to do from time to time as work fluctuates. Is there a possibility for part-time work? Oftentimes that helps us avoid overtime. What are the causes of overtime? Is it cyclical? Is there an annual order that comes in? Does that frustrate our ability to hire full-time employees as opposed to seasonal employees? And who are the principal recipients of that overtime? Is it exempt people performing some non-exempt work as extra time? Is it non-exempt? Do we use shifts? Do we assign overtime by shifts, or do we do it individually? What are our practices in assigning overtime? All those can fluctuate, and all those can be considered at this point. So again, we're looking at opportunities, and there's a couple other things that we all know come up that are kind of helpful sometimes when you want to reorganize. Do you have any upcoming retirements, particularly in the exempt rate? That may be an opportunity to consolidate some exempt positions, some exempt duties. It may be an opportunity to change the department composition. Combining an upcoming retirement with this change in law gives a rationale for changing the status quo. And we all know that people are hesitant to change the status quo. Now we have some good reasons for it. Workloads, you have some big orders coming in. Is there a shift in the type of work? Are you developing a more technical type of work than you had in the past? And then there's always, we should at least be looking at previous errors? Have we misclassified? And by that I mean, do we have some employees that we've classified as exempt over the years who really don't qualify? And we've been nervous about addressing that because we haven't had a good reason to do that without really calling that to their attention. Now we have a reason to do that. We're looking at a new test. We're looking at a new salary level. Is somebody not reporting the way they should? Have they been following proper reporting, even exempt, non-exempt individuals? Have they been reporting properly? Do you have that employee who just always wants to work a little extra and never bothers putting down the time they worked? And you know darn well they're keeping a book because 5 years from now they're going to sue you for that extra overtime. That type of thing you want to consider. You have an opportunity to consider it now. And again, fat elimination, you got the perfect excuse. You got a new program, you got new costs, I've got to find some money. We've got to pay for some of these changes. So what do? First thing we should do is we should start with a little overtime analysis. What is the financial impact if the job goes hourly? We know we have to deal with those exempt positions that are being paid less than $47,476. What is the cost of overtime if we simply change that person to a hourly rate or salary rate of $47,476? How much overtime are we going to have? It's going to vary with whether it's sporadic, whether we can spread it over time and use a salary option like Laurie explained. The other thing is, will we cause compression when we move some of these exempt employees up? Is the next level up going to now be making just a little bit more than people that used to make several $1,000s less? So we have to consider the impact going up the chain. Adjusting the salary, now decreasing the hourly rate to reflect contemplated overtime makes a lot of sense in a lot of cases, in a lot of scenarios. Now, that is probably contrary to the opinion of the Secretary of the Department of Labor. He doesn't seem to be very interested in that, but it certainly is a realistic possibility. It may have a non-monetary cost. There's an appearance that there will be less money for the same amount of work, and depending on how that's handled, if you have several exempt positions that you're dealing with, you have to be careful to avoid that appearance of unequal treatment. And at least be cognizant of that as you address the issue. So what is the nature of the work that causes the overtime extra hours? Is it exempt or non-exempt work? Can it be consolidated with other like work? Look for those opportunities. Think about it. Where are the opportunities? Where are the efficiencies that might be reached? Now there's going to be other things that are going to affect your ability to shift work. For example, one of the things that you might run into is you might have extra pay for exempts. As employers, if we pay extra pay for hours worked in excess of 40, and you see that in some circumstances, that's completely up to the employer how that's done. But if there's some money that's already been put aside for that, that's money that can be used to offset overtime costs. Bonuses. If we have non-discretionary bonuses right now, and we're paying them annually, is there a way we can shift them to quarterly to address some of these issues? Remote work. There are all kinds of accounting issues, as Laurie's reviewed with that, and there's some things we're going to have to be teaching the employees. There is going to be training involved. Particular skill sets. Some workers can do it real well. Some workers don't do it as well. Directing work to effective workers is another thing we have an excuse to do right now. And then certifications. You run into some situations where there is certain work that only certain people can do because of certifications they bear. That can affect your ability to reorganize. So what do? You look at your system, you look at the workflow, and then you start playing what if. What I would suggest is you chart a few different scenarios that accomplish the goals you're seeking to accomplish, and you cost those scenarios out, you talk them through. You think through the impact on morale and production, your flexibility, ability to be efficient when the workflow shifts and changes, and then you talk about what happens if some get pay raises and some get reclassified to hourly. But don't forget, non-exempt workers can do exempt work. There's nothing that says that a person that's doing some exempt work right now as a salaried employee who doesn't reach the threshold test could be treated as an hourly employee even though they continue to do some exempt work. So don't lose sight of that. The converse isn't there's nothing that keeps you from allowing hourly employees to do some exempt work. Like I said, what we're hoping to do is to get you thinking a little bit. We're trying to give a little bit different take on these issues than we have in the past. And one of the things we'd like to do is we forwarded a scenario. Now, it involves a small company to kind of focus issues, but believe it or not, it's very close to an actual scenario that has occurred that is being analyzed right now. And that's the board with you scenario that we had sent out at 5 o'clock this morning. I'm going to go over it real quickly, and hopefully this will just get us started thinking so that we have something to discuss and think about. So board with you is an incorporated manufacturer, it's a wood shop. About 6 people in 2 divisions. We're just talking about manufacturing. There's also a sales division, but we're not addressing that right now. Woodworkers and detail assembly are the 2 divisions. Now, it's a pretty old company. It's been around for a while. Each division is overseen by a foreman who's paid $44,500 as a salaried employee. There's also a bonus. It's done annually, and it's discretionary. Last year's bonus was around $4,500 for the foreman. The year before was around $22,250. The woodworker machinists make from about $16 to $18.50 an hour. Overtime for the workers averages somewhere around 200 hours a year. Unfortunately, the overtime, as they discovered when they did the salary, is not sporadic and spread out throughout the year. It tends to be concentrated at one point in time. The 2 foremen in the past have split the overtime, working about 100 hours each year. Originally, there had been about 4 employees in the woodworking division. Timely retirement reduced the assembly division, that was about 2 years ago, to the current level of 2 employees, the foreman and the detail assembler. The foremen report directly to the president, who draws a salary of $100,000. The president and the foreman also spend a substantial amount of time performing non-exempt work. In fact, the 2 foremen are on machines almost 4 hours a day. President considerably less, but still spends some time during crunch times on the machines. All employees except the detail assemblers are cross-trained. When deadlines creep up, as I mentioned before, the 2 foremen pitch in and work more than 8 hours. It's particularly true for the assembly foreman. The foremen are not paid anything for overtime, but they are allowed to accumulate off time based on the hours they work over 40 hours per week. So what's the scenario? You got 6 employees, 2 managers. We know we're going to have to deal with them because of what they're making right now. Exempt employee discretionary bonus, comp time arrangements for exempt. Probably need to at least talk about the president. Recent reorganization due to retirement reduced one of the 2 divisions. All employees save 1 are cross-trained, and they're paid around $18 an hour or so, which should give you some ideas as far as compression between the foreman and the hourlies. What should we do? What's our assignment here as HR professionals and executives and business owners? Well, we should reorganize, or at least look at our organization and determine whether we should reorganize in a manner that can optimize efficiency, that can minimize cost, and doesn't crush morale, and probably most importantly, complies with the new FLSA. I mean, we've got the government's attention. So identifying the problems. In the scenario we have, we know there's a salary level test issue for the assembly foreman. He used to have 2 employees. Now he only has 1. He's only paid $44.50. So there's a couple problems that we have in regard to the assembler foreman. Also, an issue that might come up is, are we paying them on a true salary basis? Are any of us troubled with overtime? we shouldn't be, but it's an issue that you might want to address. We do pay extra time in the form of almost like a comp time for the foreman. Now, if the person's exempt, you can pay them however you want or not pay them at all. If the person's not exempt, that's obviously a problem. You have to pay overtime in terms of cash. The president is something we should at least consider. Right now, he would qualify as a highly compensated employee, assuming that he performs white-collar duties and that he, let's go use management test. He makes decisions involving discretion and affecting the overall benefit of the company on a routine basis. So we have a person who now is making $100,000. We don't have any compression coming from the bottom that we know of. I mean, the foremen are making less than half that he makes. So do we want to increase his wages? Now, if we're concerned about the highly compensated employees and we're only applying that duty test, well, we probably need to raise them to 132, just like the director of the DOL would like to see us do. But I'd submit to you don't have to. As long as the other duties tests are met, let's look through and let's analyze. Is he an executive or is he a manager? And if he is, we can exempt him under that test. The foreman duties. As we audited the foreman duties in this case, the principal foreman duty, both of the foremans, disciplined, hired, fired, reviewed timesheets of the employees in their divisions. And then what they did is they kind of did a supply and demand split. The woodworking foreman was responsible for ordering raw materials and keeping things moving, maintaining production and so forth. The assembly foreman was responsible for product packaging, quality control, delivery. So that was a split of work that they had. And each employee also acted as a lead. Each of the foremen acted as a lead, demonstrating tasks, working in the shop, performing non-exempt duties, as I mentioned before, about 4 hours a day. So what issues could be addressed? We know we have to address that $3,000 almost for each foreman to meet the salary level test. We know that the assembly foreman might have a problem with the duties test. He's no longer an executive. He's not overseeing 2 people. And I submit to you that as an HR person looking at the process that we have right now with 6 employees, we might have too many supervisors to begin with. We do have some nice tools in this particular example, as you think about it. You probably can come up with some more tools. Everybody's cross-trained. We can probably distribute overtime pretty evenly throughout this group. There's not much compression. The hourlies are making less than the supervisors. And the extra cost of the bonus program is some additional cost we might be in a position to use since it was a discretionary program to begin with. So looking through the solutions for this and just thinking it through as we analyzed these positions, there were a couple different solutions we came up with. And there are more. There may be a couple different ways that could benefit the company that you could solve the issues we have to deal with in this scenario. One option is pay both foremen overtime at an hourly rate of $20 per hour. Make them $20 per hour employees. Don't change their duties. There's nothing wrong with exempt duties being given to non-exempt employees. Discontinue the comp time. You can't do that anymore because now you got to pay that as overtime. In this case, the bonus could remain as is, or you could change the bonus. Add an additional week of vacation each foreman. Remember, the foreman used to earn additional time under the old system by hours in excess of 40 hours per week. They were allowed to net that time. I think there was a limit, though, at 80 hours, if I recall. Net cost, arguably, it's nothing. In fact, there's a decrease in off time for the foreman. They used to get 2 weeks off. Now they get 1. Now that could result in a bit of a morale problem. They're getting paid less for doing the same job. So there are things like that that you've got to think through. Another option that could be done here is consolidating divisions. As mentioned before, I think a lot of us looked at this with 6 employees, thought that this might be a situation where you're a little top-heavy. So assign additional administrative tasks to the woodworker foreman and increase the salary. Bring him over that basis. You're going to have no trouble with the duties test if he has all those duties and he's overseeing 5 employees. Then make the assembly foreman a shop leadman and use that 20-hour rate. Have him do more of the training. The president will continue to assume certain administrative functions. You could change his duties slightly if you wanted to take on some of the administrative duties that we would be shifting to the woodworking foreman. Give that additional week to the lead man. Extra time procedure for the foreman could continue so he can get some off time the way he used to. The cost of that is about $2,500. When you compare that to the $6,000 that the director of the Department of Labor would have us pay, it's not a bad deal. And it's probably going to be a more efficient way to run the factory. So I guess what we're trying to say as we move on here is there are more than one way to skin these cats. And it's time for us to start thinking about this and addressing the different ways that we can address these issues. What we were hoping to do today is get you thinking. We pointed out there's some complicated issues that you're going to be running into. Some that you might not want to try to do at home alone. And I mean things like exempt, non-exempt benefit analysis, if you're considering things like fluctuating work week. Probably a good idea to get some assistance there. And you have a lot to analyze here. There's things you should be thinking through. We hope we gave you a little different look at this issue than you might have gotten in other seminars, where basically what we've been hearing is a reiteration of the fact that there's going to be some changes. I think it's time we started thinking about the impact of those changes and how to deal with them. And we hope we've got you on that track. Thank you for spending your lunch with us, and we hope this is helpful. You certainly can dial in some questions if you have. And Bruce,
we're going to, again, as a reminder for those of you who may have come in late, you can pose questions in writing to any of us. You're going to use the Send Note to All Presenters tool, and we know it works because we did get a question from Amy, which we'll get to in a second. And depending upon your device, the menu for that is either on the upper left corner of your screen under Participants, or it's on the lower right side of your screen as a text box. And we've got a few minutes, so let's get started on that. The first question comes from Amy. And her question is whether or not the exempt or non-exempt classification has to be the same across a position. For example, can one branch manager be exempt and the other be non-exempt? I'll take a little bit of a crack at that based on salary alone is Amy's question. And well, sure, but look at why you're doing that. Jim just talked about kind of going through okay, you're going to be making these changes. Let's look at the whys and wherefores. In this particular circumstance, you probably need to justify why you've got one person hourly, why you've got one person exempt. Are their benefits different? You want to look at their length of service. Is the size of the branch different? Are the number of employees that they're supervising, is that different? Because what you don't want to do here is you don't want to buy yourself an Equal Pay Act suit because of the difference, allegedly, or even if it just looks like it's based on age, sex, or some other demographic characteristic. Does anybody else have anything to add to that?
Well, looking at our scenario, you'll notice that the foreman, because it's such a small shop, the foremen were also performing certain managerial tasks. They were planning inventory, they were planning parts ordering and materials ordering and keeping inventory. Those issues, if there's some independence there, could qualify under the administrator test as opposed to the executive test, the supervisory test, as it's commonly called. there would be nothing wrong with shifting some of those exempt duties, taking all the executive duties and putting them over one person, and taking all those other duties and all those administrative duties and putting them into another job position as part of your reorganization. That could justify both exempt, or it could justify, depending on the amount of responsibility, one being exempt, one being hourly.
A couple of the questions related to the salesperson roles. Hey, Jose, how you doing, buddy? One of them is to review that, and then there's another question from Katie. Is there a difference between inside and outside sales, or is it just how we track their time? No, there's a big difference. The outside sales is a completely different exemption. Inside sales is not subject to that exemption. We run into that a lot, that people think, well, you know, sales is sales, and no, it isn't. So you do need to be concerned about that. Several of you have asked if this is going to be printed out. Yes, it can. We will be sending you copies of that after we're done here. Dan has asked if your normal work week is 37.5 hours per week, do you still pay? Well, somebody just asked another question, so now I can back up. You still have to pay overtime, yeah.
Well, you still have to pay overtime when you get over 40.
That's right.
But
I think the question was, if the normal work week is 37.5 hours, do you have to pay non-exempt? Do you still pay non-exempts one time, their rate up to 40 hours, and then 1.5? No, the overtime requirement is only for those hours over 40. Not for the if you have a regular work week, which is defined as 37.5, you're not paying overtime until you hit the 40 mark.
Of course, you got to be a little careful with that if you've got a union agreement.
Yeah, of course.
And you pay overtime after 37.5. You could wind up having what they call non-FLSA overtime as well as FLSA overtime, but that's a fairly complicated issue.
Laurie asks if we offer comp time to all employees, both those exempt and non-exempt, are there any issues for us to think about? All comp time is earned hour for hour of overtime work. Well, if they're not exempt, you can't do that.
Correct.
There's a very limited exception, and that's using it in the same pay week, not the same pay period, but the same pay week. So really, you should be looking at that whole program.
Yes,
There's
I
also
would
an exemption if you're a government employee, if you're government or are schools subject to that, Jim? You're the expert there.
Yeah, any government.
Yeah.
And if you're a government employee, just so we're clear on that, you can use comp time up to 240 hours per employee, up to 484 per. But you have to run that at time and a half. You pay that at a time and a half rate, not at a single time rate, as suggested. In some situations I've seen, particularly in the public sector, street superintendent types, for example, are paid hour for hour overtime that they work. Well, those people are exempt employees, and that's similar to the example I gave in this scenario, where the employer wants to compensate the extra time, and they can do so however they want. They can use hour for hour, or they can pay nothing at all.
Yes, and in the private sector, I would add, so if a person gets to, it depends on how you're defining that. If a person gets to, say, 36, they work a couple of late evenings, and they get to 36 hours by Thursday night, they can leave early on Friday. If you are talking about comp time in a different pay period, it has to be, the comp time has to be calculated at a time and a half. So in other words, they're getting time and a half comp time in work week 2. So if they work, for example, 44 hours in week 1, they're getting really 6 hours of comp time in week 2, if that makes sense.
Jeff has asked, hey Jeff, in your last example, I think the example that Jim was giving, would you also not comply by just paying the foreman a year-end discretionary bonus of at least $3,000 to get his annual wage over the $47,500 as long as the bonus is within the 10% threshold? Well, that won't work because the bonus, for a bonus account, it has to be at least quarterly. It has to be at least quarterly.
But otherwise, the thought is good if you can figure out a way to do it quarterly.
Yep.
I see a couple of questions here about nonprofits. Nonprofits, unlike a lot of other federal employment laws and things like that, like for example Title VII only applies to employers over 15 employees, Age Act only applies to 20 or more, FMLA over 50, there is no employee count. In a nonprofit situation, you can either have enterprise liability under the FLSA or individual. And the individual coverage applies, unfortunately, with an analysis of whether or not the employee regularly uses interstate commerce, essentially. I mean, do they use the mail? Do they make out-of-state phone calls? Things like that. You can, even if your enterprise as a nonprofit isn't covered, the employee might be. So that's going to require more information than we have based on the question. But they ask you to talk to somebody about that, whether or not you have coverage under this or not as a nonprofit.
I should add to Jeff's question regarding church entities. One of our partners just did an excellent, Steve Knowles just did an excellent review of that. And if you want to call us, we can get you in touch with him to help you with that. My understanding is that analysis is based upon, I do some church-related work as well, is that analysis has to be based upon what the job is, not the fact that you're a church. In other words, if you may fall under the case law created ministerial exception, but the fact that you're a nonprofit or a church in and of itself probably isn't going to help you out here. Let's go through and see if we can dial down, and I know I've missed a couple here. Stephanie asks, are owners exempt from these rules?
Do we lose people?
I don't know.
No.
Oh, okay, sorry.
Are owners exempt from the rules? In a word, no. If they're being paid, for example, I use in our scenario a president of a corporation. That person is not exempt. You're going to have to fit them under an exemption.
Stephanie asked, we have, whoops, hang on a second.
Well, maybe I would say they're not automatically exempt, right, Jim? They might be exempt by virtue of an executive because they qualify for the executive exemption,
right.
But they still have to have the.
Yeah, they have to find the exemption.
They still have to have the salary threshold, of course. And that's a very interesting thing because I just read something recently that said that something like 40-something% of CEOs of nonprofit corporations don't make enough. Because if you think about all the humane societies out there and the little nonprofits, they're going to have a problem.
Stephanie asks, she says, we employ therapists. If they work full-time, they meet the new salary requirement. However, we have some part-time therapists that, if annualized, they would meet the test, but they only work 25 hours. So then they don't. How might we handle this? I'm going to kick this over to Laurie in a second, but really what you want to look at is the weekly number, not necessarily the annual number.
That's correct. That is correct.
Remember, salaried employees, salary, that's determined without any consideration of how much time they actually spend to complete the job. So you're looking at, the long and the short of it is, you're looking at that weekly. Are they making the right amount that they need to on a weekly basis?
We had somebody who asked a question about what are the benefits of paying somebody who works 40 hours, making them salaried non-exempt. Making somebody salaried non-exempt, of course, is the best of both worlds to the employee because, of course, they're not docked for anything under 40, but they're paid overtime for 40. If you have somebody who is working, generally speaking, 40 hours and really isn't paid overtime or working overtime on a regular basis, then there really isn't a distinction. That is that first scenario, the easiest method, where you're simply you're making them non-exempt, you're paying them a salary, but you still have to figure out what that hourly rate is for purposes of any work over 40 and a week, and that is a simple calculation. You figure out what is their salary, you divide it by 40, that's their hourly rate, that's multiplied by 1.5 for the purposes of overtime. If they're paid, if they're working significant overtime within the course of a year, you might want to think about the salary non-exempt. The other danger to making a non-exempt person salaried is just that both supervisors and employees tend to get lazy into that situation because they tend to not track time like they should, because they continue to operate under the way they've always operated, and they don't track time. Now, everybody who's exempt or non-exempt going forward, whether or not they're paid on a salary basis or whether they're paid hourly or fluctuating work week or for any of these ways that we've talked about, they have to track time, and the employer has to ensure that you are capturing all time worked. And when the person is salaried, I would just caution that sometimes people don't do that. They start doing things over and above. When they get home, they start checking their voicemail and things like that. If they're salaried, their mindset hasn't changed. So that would be my only, I guess, cautionary tale there.
There's a couple of questions about the timing of this. One is December 1st a payroll date or a working date? That's a really excellent question.
I don't know that.
I think it's a working date. So that's why I was like, why are they doing this, at this time? But that's a good question. Stay tuned, and we'll try to give an update on that. And then Jeff had the question, this goes effect December 1st, so does the 2016 annual end-of-year salary for tax purposes have to be that $47,000? And again, that's a good question. My educated guess is no, because you don't have to start paying that rate until December 1st. Conrad asked
again, you can use weekly.
Yeah. Conrad asked the question, so a part-time professional exempt employee still has to meet the weekly salary expectation for a full-time employee to be exempt? Well, that's a good question.
I didn't catch it all.
The question is, so a part-time professional exempt employee still has to meet the weekly salary expectation for a full-time employee to be exempt?
Yes. Yes, my answer to that would be yes. Again, it's not a question of how many hours the person has to work to complete the task. The question is the person paid as a professional?
And there was a question. There was a question from Alan about, and I think that also answered Julie's question about the therapist. Alan had a question. They've got somebody that works in the office, and then that person is also a pilot. And for the time that they're flying, they get paid a per diem. In other words, they get paid a set amount regardless of their hours. That person isn't going to make the 47,000 meet the 47,000 minimum. There's a couple things you could do. You could establish a blended rate. That's pretty unwieldy. My thought would be is that probably that flying time needs to be converted to an hourly rate of some kind, and then probably needs to be paid on an hourly basis.
That's a real interesting question.
There is technically the rule with regard to salary basis test says that a person who is exempt under any of the white collar exemptions must be paid on a salaried basis or a fee basis that can be extrapolated out to $913.
Right. Right. So
and that really applies, I've seen that applied in home health care aides and things like that, and accountants who do audits and things like that, who are paid on a fee basis based on the accomplishment of a task. The problem with that, and we've seen some of the Department of Labor opinion letters on that, is when you have that blended situation where for example, a nurse goes to a home, or a social worker or something does home visits and things like that and is paid on a fee basis. The problem with then they do additional work, then they get training, or then they have to go do administrative work or something that is paid on an hourly basis. When you start doing that blending, sometimes you can lose the exemptions. So I guess our takeaway in that situation, so you're going to try to do something on a fee basis or something like that, talk to one of us first, make sure that you're okay there.
There's a question, if 10%, this is from Kim, can be discretionary, does that mean that a salesman's base salary must be $42,750? Well, no. Keep in mind, I'm assuming that this is an inside person, not an outside person. It only means that you can only use up to the $4,700 for that.
Although I think at Kim's situation, that is a auto dealership. Those are auto salespeople, and those are exempt otherwise. And we didn't get into every little possible. There are certain industries who apparently have very good lobbies who get their own exemptions, and one of those is car dealerships get exemptions for techs, their mechanics, their parts counter people, and their auto salespeople. They're just automatically exempt from overtime. So in that scenario, you're not even having to worry about it because they are exempt regardless of how much they make.
Let's see. If an employee, Barb asks, if an employee is exempt and over the annual threshold, is the employer or employee required to track the hours on and off premises emails at night? Well, I'll take a shot at starting this. If they're exempt and they're over that threshold, I think the old rules apply, but question you're going to have is how much over are they? If they're close to the line, I would have them track it. And I think as a matter of efficiency, I think I would probably start tracking that anyway to make this, to see, are we really compensating these people appropriately? Anybody else have anything? We're over our time. These have been excellent questions. I think we've hit all of them. I'm just scanning. Here.
Oh, we got another one.
Oh, how is a bonus defined as discretionary or non-discretionary?
I can answer that. I mean, if you are having a bonus that is paid no matter what, as long as that person has met certain criteria, and again, it has to be paid at least quarterly or more often, then you can add that, whatever those bonuses are, to meet that threshold. Only up to, of course, 10%, $47.47. If it is based on, whether or not, there's objective criteria that is applied to the employees, whether or not they are eligible or not, then that is considered a discretionary thing. It doesn't count no matter how much it is.
I think that we're probably going to have to let me see if one more question came through. I just heard something. Is it possible to require an FAQ? We did do a client alert on this. If you'll check our website, dkattorneys.com, we probably have that. Appreciate the comment about the good stuff. And this is also recorded, and you can check it out on our website when we get it posted up there.
And again, we will be sending out I know there was another question, somebody late, about the PowerPoint, and we will be providing those.
So I think, having said that, on behalf of all of us and everybody at Davis and Kuelthau, thanks very much for joining us. Have a great rest of your day.
Thank you.
Thank you.